Michael Saylor's relentless Bitcoin strategy is charging full steam into 2026. And if you're holding Bitcoin, this changes everything. We're talking a multi-billion-dollar buying spree that could send shockwaves through every exchange, every wallet, and straight into your portfolio. While Wall Street suits are still debating if Bitcoin is real money, this man is going full send with a strategy so aggressive it makes the Texas gold rush look like a yard sale. Buckle up, because what MicroStrategy is planning will either make you a genius for paying attention or leave you kicking yourself for sleeping on this video. You know what's insane? While your neighbor's still asking, should I buy Bitcoin? Saylor's company has already stacked 650,000 BDC, and they're just getting warmed up. This isn't your uncle's retirement portfolio. This is institutional chess on a global board and retail investors like us. We're about to see if we're playing the same game or just watching from the sidelines. Quick heads up, this is for educational and entertainment purposes only, not financial advice. Do your own research, folks, and consult a pro before making moves. So here's the tea. Saylor's blueprint heading into 2026 isn't just about buying more Bitcoin, it's about fundamentally reshaping how corporate America views the hardest money humanity has ever created. While the Fed's printing dollars like they're going out of style, oh wait, they are going out of style, MicroStrategy is constructing a financial fortress that makes Fort Knox look like a piggy bank. Let's break down the master plan, because this is where it gets juicy. First up, the buying strategy that's making traditional CFOs lose sleep. MicroStrategy isn't just dollar cost averaging like us mortals. They've engineered a system that's part Wall Street magic, part Bitcoin maximalist fever dream. They're issuing convertible notes and preferred stocks, basically fancy IOUs that convert to stock or pay yields, and using that cash to stack sats like there's no tomorrow. It's like using your credit card rewards to buy the entire rewards program. The genius! They're leveraging traditional finance tools to escape traditional finance. Talk about using the master's tools to dismantle the master's house. The scale here is bonkers. We're talking potential acquisitions in the billions throughout 2026. Not millions, billions. With a B. That's more than some countries' GDP. And here's the kicker. Every time they announce a buy, it sends ripples through the market. It's not market manipulation, it's market domination. When an elephant jumps in the pool, everyone feels the splash. But here's where strategy meets obsession in the best way possible. Saylor's not playing short-term games. While day traders are sweating over 5% moves, he's building a 100-year position. He's literally said Bitcoin is the exit strategy from fiat currency. Not an exit strategy. The exit strategy. This man looked at the entire global monetary system and said, I'm betting against all of you. And so far, he's winning. Now let's talk about what this means for institutional adoption, because this is where your Bitcoin is too risky. Uncle gets proven wrong in 4K. MicroStrategy isn't operating in a vacuum. They're the canary in the coal mine. Except the canary is thriving, building a nest, and inviting all its friends. Since Saylor went all in, we've seen a parade of companies dipping their toes. Tesla did it. Square did it. Even stuffy insurance companies are allocating now. When Fortune 500 boardrooms see MicroStrategy's stock outperforming basically everything, those quarterly earnings calls get real interesting real fast. The institutional dominoes are falling faster than you can say digital gold. Pension funds that wouldn't touch crypto with a 10-foot pole 3 years ago, they're suddenly exploring digital asset allocation strategies. Translation, they're buying Bitcoin but trying to sound boring about it. Banks that called it rat poison, now offering Bitcoin custody services. The hypocrisy is chef's kiss, but hey, we'll take the adoption. And with regulatory clarity improving and even talks of national Bitcoin reserves under the Trump admin, 2026 could see sovereign wealth funds jumping in too. Here's the plot twist nobody talks about. Institutional money moves slow but big. Like glacier meets tsunami, slow but big. We're not talking about your buddy throwing $1,000 at Bitcoin during a party. We're talking asset managers with trillions under management who need 6 months of committee meetings just to change their coffee brand. But once they commit, that's generational money flowing in. Saylor's 2026 plan is essentially a lighthouse for these massive ships, showing them it's safe to enter the harbor. And speaking of safe, MicroStrategy's custody game is tighter than airport security. They're not leaving coins on exchanges playing roulette with the next FTX situation. They're using institutional-grade cold storage, multi-signature wallets, and security protocols that would make the Pentagon jealous. This matters because when BlackRock or Fidelity look at Bitcoin, they're not worried about the tech. They're worried about not getting fired. Saylor's providing the blueprint for, yes, you can hold billions in Bitcoin without your board having a collective heart attack. Now let's get to the part that hits home for us retail folks, because this isn't just a spectator sport. What does MicroStrategy's 2026 rampage mean for your stack? First, the good news. Supply shock city, population, you. Bitcoin's capped at 21 million coins. When institutional players are hoovering up thousands of BTC at a time, that's thousands fewer available for everyone else. It's basic economics. Same demand, less supply, price goes brrr. If you're holding even a fraction of a Bitcoin, you're essentially holding a piece of increasingly scarce real estate while billionaires are trying to buy the whole neighborhood. But here's where it gets spicy. The retail opportunity window might be closing faster than we think. Right now, you can still buy Bitcoin without calling your private banker or filling out 47 forms. That's huge. You've got the same access as institutions, just with less capital. But once these massive players fully enter the game and prices reflect true scarcity, the barrier to entry gets steeper than a San Francisco sidewalk. The average American might be priced out of owning a whole coin way sooner than 2030. This is why Saylor's plan matters to your kitchen table investment strategy. You're front-running the slowest, richest money in human history. Pension funds, endowments, sovereign wealth funds, they're all coming, but they move at the speed of bureaucracy. You move at the speed of an internet connection and a decent exchange. That's your edge, man. If you're nodding along thinking about your own setup, what's one thing holding you back from stacking more sats or taking self-custody seriously? Share in the comments. Let's talk about the elephant wearing a Bitcoin standard t-shirt in the room. Volatility and risk. Yeah, MicroStrategy's stock swings harder than a playground in a hurricane because it's basically a leveraged Bitcoin play. When Bitcoin pumps, MSTR goes parabolic. When Bitcoin dumps, MSTR dumps harder, like we just saw with the recent plunge bringing their market cap below their BTC holdings. Saylor's betting his entire corporate existence on Bitcoin going up over time. It's all in, no plan B, full conviction. For retail, you probably shouldn't match that energy with your rent money, but taking a page from his conviction while managing your own risk, that's the sweet spot. The brilliance of the 2026 strategy is its transparency. Saylor isn't hiding the ball. He's literally announcing buys, tweeting about Bitcoin philosophy, and doing interviews explaining exactly why he's doing this. It's not insider trading when the insider is screaming the strategy from the rooftops. This means retail can literally watch the playbook and make informed decisions. We're seeing institutional strategy in real time, which is rarer than a politician keeping a campaign promise. And here's a truth bomb. MicroStrategy's success makes Bitcoin safer for everyone. Every quarterly report showing their Bitcoin holdings appreciating, every successful bond raise, every institutional investor who sees their model working, it all builds legitimacy. The Bitcoin is too risky narrative gets harder to sell when a NASDAQ-listed company has been all in for 5 years and isn't bankrupt. Actually, they're thriving. That narrative shift is worth more than any Super Bowl ad. But let's keep it real for a second. The 2026 plan has risks. Interest rates, regulatory crackdowns, a massive global recession. These could throw wrenches in the machine. Saylor's leverage strategy works phenomenally in a bull market and Bitcoin uptrend. But leverage cuts both ways, and they've even set up a $1.44 billion USD reserve to cover dividends and avoid selling BTC if things get tight. It's not FUD to acknowledge this, it's just math. The difference? Saylor's betting on a 10-year horizon minimum, not next quarter's earnings. Time horizon matters. For retail, the lesson here isn't copy everything Saylor does. It's understand why he's doing it and adapt it to your situation. You probably can't issue convertible notes to buy Bitcoin, but you can practice consistent accumulation, self-custody, and long-term thinking. That's the democratized version of the MicroStrategy playbook, and honestly, it's powerful enough. The 2026 timeline is also strategic genius. We're potentially entering a post-halving supply crunch zone, with institutional adoption accelerating and possibly a more Bitcoin-friendly regulatory environment, depending on how Washington's power players line up. Saylor's not just buying Bitcoin, he's timing massive accumulation with multiple tailwinds converging. It's like catching a wave when the tide, wind, and moon all align. You don't need a surfboard the size of MicroStrategy's, but you should probably be in the water. So what's the bottom line for you, the person who clicked this video because you care about your financial future and Bitcoin's role in it? Michael Saylor's 2026 plan is a signal fire. It's telling you that the biggest, boldest corporate bet on Bitcoin isn't slowing down. It's accelerating. While mainstream media debates if crypto is dead for the 47th time, the smart money is stacking harder than ever. Your move? Stay informed, stay disciplined, and recognize that this retail versus institutional race isn't about who has more money. It's about who sees the future first. Right now, you're watching the future get built in real time. That's the opportunity. All right, Bitcoin fam, if this video got your neurons firing and your conviction rising, smash that like button like it's a buy button at 30,000. Subscribe if you want more Bitcoin firepower without the BS. And absolutely crush that notification bell so you never miss when we drop the next one. Share this with your crew who's still on the fence about Bitcoin. They'll thank you in 2026. And drop in the comments. What's your Bitcoin hot take? Are you Team Saylor or do you think he's too aggressive? Let's talk about it. Until next time, stack sats and stay sovereign.